Hi folks, Gettess here with the Market Sense for the week of January 28th, 2014. We'll be looking at charts that come from the Trade Navigator software, and this is quite a week. We've got the State of the Union address, the Super Bowl, and oh yeah, the Fed meeting. I bet I know which one the markets care the most about. Looking here at the weekly bond market, we've got a resistance target up here in the 133.28 area, which you can see they have not been anywhere near so far. We also have support down here, let's call it 131.24. That's that upper moving average there, that if they hold that should continue the move up. They haven't been down to that either. Chances are we'll see at least one of these, emphasis at least one of these, after the Fed announces whatever they announce. We do have more support down here in the 131 area, the middle moving average, and even a move down here to the lower moving average is about 129.24. I mean, come on, if they break down there, it'll still look pretty good. This looks like a double bottom above a previous low. That's a very bullish pattern. I suspect we should see them take out these highs and move up to this upper Keltner channel at some point. I suspect that's what the analysis tells me, but believe me, if they don't like what they hear from the Fed come that Wednesday afternoon announcement, this will change drastically. And I think what the Fed has to do is continue to pull back on their bond buying. If they don't, it'll send a signal that they don't have confidence in the economy, and that could be really bad. Now, stocks have had a little nasty reaction here in the last week or so, but if you look at this, you can see they've only gone down in the area of the mid-Keltner channel, which is, nothing nasty. You can see they've only been down that low 3 times in the last year. So nothing really negative about that, other than, you got to watch how they come back up here. We're looking at 1802 being roughly the area that should halt them if they're really going to plummet immediately. Otherwise, they should be back up. The middle moving average is over 1820, and the upper moving average, which puts them in the vicinity of those previous highs, is around 1844. Now, you can visualize a pattern here where this will turn back up and fail to make new highs, or maybe just make marginal new highs, but especially if they fail to make new highs, stop in here someplace and then turn back down. That might be not only a bad signal, but a really, really bad signal. I mean, that could mean that all of this crap we've been looking at for the last 5 years even is over with, and we're going to see some nastiness. But for now, there's nothing to guarantee you that the move is over, and they could still turn right back up and go to new highs from here. Again, I think what we hear from the Fed Wednesday afternoon probably has a really, really big impact on how they react, at least immediately. Fascinating times. It's a fun time to look at stuff. So that's what we're looking at currently. I hope you can find something profitable to get yourself into. Thanks for checking in to see what we think.